Welcome back to Money Mondays. Inquiring minds want to know if third time's a charm. I'm talking about the American Rescue Plan Act, Congress' third stimulus package. Stay tuned to find out what's in it for you and how it can affect your tax filing this year. President Biden signed the act on Thursday, March 11th, officially putting the bill into effect. Of course, stimulus checks are involved, but there are also sections of the bill that directly affect the taxes you're supposed to file this year. Make sure you watch until the very end to see what the IRS has to say for those of us who have already filed and for those of us who have not. Let's start with the parts of the bill that are the same from the last bill. If you've been collecting and are still collecting unemployment compensation, that unemployment is going to be able to continue until September 6th. This is true if you are an employee and were receiving state benefits, as well as if you were an independent contractor or gig worker and were receiving the $300 weekly payments that were funded by the federal government. Those $300 payments will continue until September 6th. You may have to refile or renew your claim based on whatever state you live in and the rules that apply there. So just make sure to stay on top of your weekly filing and check with your local state government to make sure that you are going to continue to receive those benefits. This brings me to the parts of the bill that are different from the previous stimulus packages. I want to start specifically with the tax differences because one of the biggest changes directly affects individuals who were claiming unemployment in 2020. So if you received any unemployment compensation from January 1st to December 31st of 2020, then you have the ability to waive up to $10,200 of that unemployment compensation if you meet some guidelines. Now, the requirements in order to be able to waive up to $10,200 is that your modified adjusted gross income must be less than $150,000. This is true for both individuals and married filing jointly. For example, if you are married filing jointly and your combined modified adjusted gross income is less than $150,000 and you received $20,000 in unemployment compensation and your spouse received $5,000 in unemployment compensation in 2020, then you would be able to waive the full $10,200 of your unemployment compensation, and your spouse would be able to waive the entire $5,000 that they received. Note that you cannot waive the other $5,200 out of your $20,000. Each individual gets up to $10,200 based on the unemployment income that they personally received. So what does this mean and why should you care? If you're able to waive $10,200 from your gross income, that's going to reduce your overall tax liability. It actually means a savings of up to $1,020 in potential taxes that you would have had to pay. That means that either you're going to pay less in taxes this year, or you may now qualify for a refund or a larger refund. The other benefit to reducing your gross income is that it reduces your adjusted gross income, which may make you qualified for other federal benefits. For example, we're going to talk about in a little bit the stimulus check and the qualifications to receive that check. If your AGI is above a certain threshold, you will not qualify for the stimulus check. So this $10,200 waiver could be the difference for some individuals to receive that check versus not receive that check. Now, while this unemployment tax benefit is relevant for the 2020 tax year or the taxes that you're filing right now, the next two tax benefits are relevant for the 2021 tax year or the taxes you're going to file next year. So the next two tax benefits that I want to talk about are regarding the earned income credit and the child tax credit. The earned income credit is for individuals who earn low to moderate income. And it provides a credit that they can receive in the form of a refund or in a reduction of their taxes. So the most important thing to take away for the earned income tax credit changes is that the minimum age required for individuals to be able to claim this credit has been reduced from 25 years of age down to 19 years of age. Unless you're a student, then the minimum age is 24. The child tax credit has increased from $2,000 to $3,000 for 2021. If your child is going to be less than 6 years of age by December 31st, 2021, then you can qualify for a $3,600 child tax credit. Now, another thing that Congress added into this bill is that the child tax credit is going to be paid out in monthly installments beginning in July of this year. So even though this credit is for your 2021 taxes or the taxes you file in 2022, you're actually going to receive an advance on this credit beginning July 2021, and it will pay out monthly through December. Now, one thing that is important to understand is that if for some reason your earnings this year would qualify you for less of a credit when you file your taxes next year, and the government pays you a larger advance from July to December of this year, then any excess amount that you receive, you're going to have to claim as gross income when you do your taxes next year, and you will have to pay taxes on that. If you want to avoid any chances of having to pay taxes or receiving a larger advance than you may qualify for, you will be able to opt out of the advance payments and just wait until you receive your typical refund when you file your taxes next year. So keep a lookout for when you'll be able to opt out of this prepayment option. A bonus tax advantage that I want to mention that may affect a lot more people than it does right now has to do with student loan forgiveness. Now, for any individual who gets a student loan amount forgiven between January 1st, 2021 and December 31st of 2025 will not have to include that forgiven amount in their gross income. If you weren't aware of this already, if you qualify for a student loan forgiveness program, and let's say you are about to be able to get the remainder of your student loans forgiven this year or next year, and let's just say the amount forgiven is $20,000. Well, when that loan amount is forgiven, you actually have to claim that total amount as gross income and pay taxes on that amount. The IRS basically sees the forgiven amount as though the government wrote you out a check for $20,000 for you to pay off your loan. And so they see that as income that you have received, and you need to pay taxes on any gross income received. So what Congress has done in this American Rescue Plan Act is that they've allowed for individuals who are about to qualify for student loan forgiveness to not have to claim that forgiveness, that forgiven amount as gross income, which means they do not have to pay taxes on the forgiven amounts. This really is huge, not only for those who've been a part of any type of loan forgiveness program for the last 10 years or so, but especially if President Biden ends up signing off on future legislation that does forgive student loan debt for a larger amount of Americans. So keep that in mind, and just know that if we do see some student loan forgiveness plans come up in the future, that any amount forgiven is not going to be taxable. So now that we've talked about what hasn't changed and what's changed with our taxes, let's get to everyone's favorite topic, the stimulus check. It was important to save this for last because the changes to our taxes do directly affect who qualifies for the stimulus check. Now, we've seen a $1,200 stimulus check, then we saw a $600 stimulus check, and for the American Rescue Plan Act, Americans can expect a $1,400 stimulus check. Not only that, but for individuals who have qualifying children and dependents, they're going to be able to also receive a $1,400 check for each qualifying dependent. This is the first relief package that matches the stimulus check amount for both individuals and their dependents. Not only that, but this is the first relief package that allows for stimulus checks to be sent out not only for qualifying children, but qualifying dependents. And a qualifying dependent for this purpose is going to be the same type of qualifying dependent that is relevant when you file your taxes. So, long story short of it, if you are able to claim an individual as a dependent on your taxes, then this is going to be the same type of dependent that would allow you to receive an additional $1,400 stimulus check. In order to qualify for these new stimulus checks, you have to have an AGI that is below a certain threshold depending on your filing status. For single filing status, you have to have an AGI below $75,000. For head of household, it must be below $112,500. And for married filing jointly, it must be below $150,000. Like the other stimulus packages, there is a phase out in order to qualify for the stimulus package. So you can receive some amount of it even if you make more than these AGI thresholds. However, that phase out is much steeper than the other packages allowed. So there's not much wiggle room above these AGI amounts that would allow you to still qualify. To bring this full circle, the IRS is going to look at either your 2019 AGI or your 2020 AGI when determining whether you qualify for the stimulus check. So let's say that before applying any of the changes we've discussed in this video today, your 2019 and your 2020 AGI is $85,000 and you're a single filer. Well, according to the American Rescue Plan Act, you would not qualify for the $1,400 stimulus check because you make over $75,000 and the $85,000 is beyond the phase out threshold. Well, what if in 2020 you received over $10,200 in unemployment compensation? And so now, because you're able to apply the tax changes from this plan, from this bill, you were able to subtract $10,200 from your gross income, which then also lowered your AGI from $85,000 down to $74,800. Now you actually qualify for the stimulus package based on your 2020 AGI. So if you have filed your 2019 taxes and you have not yet filed your 2020 taxes, but you believe that your 2020 AGI is going to qualify you for these benefits and your 2019 AGI will not, then you want to make sure that you file your 2020 taxes as soon as possible because the IRS is going to review the AGI that you have on file at the time of determination. And all of that means is that when the IRS is ready to look at your account in order to determine whether you qualify for the stimulus check, then whichever tax year you have filed, 2019 or 2020, is the one that they're going to go with. Now, even though I just said that, the IRS actually released a news release on Friday, March 12th, telling all tax filers to wait on filing their 2020 taxes or on filing an amendment to their 2020 taxes. And that is because the bill just passed on March 11th. And the IRS needs time to update all of their forms and to work with the software companies like TaxAct and TurboTax to make sure that we can e-file appropriately or file by paper appropriately. So until they get everything updated, then they will send out another release letting us know that it's okay to go ahead and file because everything is good to go and the necessary tax changes have been applied. So just keep a lookout, make sure that you are following irs.gov, make sure that you know exactly when they give us the green light to go ahead and file. And then if you think that your 2020 taxes are going to be more beneficial to you for receiving the benefits that are in this new relief plan, then go ahead and file ASAP. Otherwise, if you've already filed your 2019 return, and you think that's going to be more beneficial to you, then just wait until the stimulus checks have been sent out before you file your 2020 taxes. If you have not yet filed 2019 or 2020, this is an opportunity for you to determine which year will be better for you and to file that year before the other. So maybe you will end up filing 2020 before you file 2019 because that's more beneficial. But again, you want to make sure that you meet with a CPA or an accountant, a tax professional that's going to be able to walk you through this process if you have questions, and just overall to make sure that you are filing your taxes appropriately, since there are a lot of changes taking place this year. So that is the American Rescue Plan Act in a nutshell. Of course, I didn't cover everything that's in this bill. I just wanted to highlight the key takeaways that I felt would be most beneficial to individuals. I want to thank you so much for joining me today. If you found any kind of benefit in this video, please give it a like, share in the comments below what you took away most from this video, and share it with a friend so that they know about the American Rescue Plan Act as well. If you like content like this, then feel free to subscribe to my channel or follow me on Instagram, and you'll be able to get videos like this every single Monday. Thanks so much for joining me today, and I'll see you next Monday.